Hey everyone, ready for another deep dive? Today we're taking a closer look at ONGC's Q3 FY25 performance.
And let me tell you, it's a pretty interesting story this time around.
Oh, absolutely.
Well,
We've got their investor presentations, their full financial reports, and even some snippets from their latest analyst meeting.
So we're going way beyond just the headlines here.
Exactly. We're going to give you that VIP backstage pass to see what's really happening with one of India's energy giants.
And the big picture here, ONGC is at a real crossroads. Think about it. They're managing these huge oil and gas operations.
Right. Their legacy business, you could say.
But at the same time, they're trying to figure out this whole renewable energy thing, too. It's a tough balancing act.
So where do we even begin with all of this?
Well, got to start with the big news. ONGC's production numbers are actually looking up.
Yeah, they managed to turn around that declining production trend, which had a lot of folks worried, right?
Oh, for sure. If you're an investor and you see production going down, it's like, uh-oh, what's happened to my money?
Makes sense. It's a sign of health, or lack thereof, for the company.
Exactly. And it's not just about investors either. It's about India's energy needs as a whole. A growing country needs more energy. And domestic production, like what ONGC does, that's super important.
And we're not talking about a tiny bump in production either.
No, not at all.
Their Eastern Offshore project, that thing's pumping out 35,000 barrels of oil every single day.
Yeah, that's enough to fill up an Olympic-sized swimming pool every few hours.
Whoa, that's a pretty vivid image.
Got to make it real for people, right? But they're not just doing this all on their own.
True, they brought in BP to help out with the Mumbai High field, wasn't it?
That's the one. That's where things get really interesting, that partnership.
Right, it's not every day you see an Indian energy giant teaming up with a global powerhouse like BP. So what's BP bringing to the table here?
Experience, mainly.
Yeah.
Decades of it. They know how to get the most out of mature oil fields.
Ah, so perfect for a field like Mumbai High, which has been around for a while.
Exactly. And the way they structured the deal is pretty smart, too. BP gets paid a fixed fee up front, which is good for their immediate returns. But then they also get a share of any extra production they can squeeze out of the field.
So it's a win-win, right?
Yeah,
BP's incentivized to boost those numbers as high as they can go.
exactly. And they're aiming for a 60% increase.
Wow, 60%. Imagine what that would do for ONGC's bottom line if they actually pull it off.
Yeah.
Oh, but hold on. We also got to talk about that new discovery they announced. The Chola 1, right? Gas and condensate, if I remember correctly.
You got it. But here's the thing about condensate. It's a bit more complex to process.
Ah, so it's not as straightforward as just finding more oil then. Does this change their overall strategy at all?
Well, here's what's interesting. During the analyst meeting, ONGC's finance director actually talked about this. They're being cautious.
Cautious.
Yeah, like
Yeah.
they don't want to chase these super long, expensive projects, especially with the energy transition happening globally.
Oh, right. The shift towards renewables. And speaking of that, ONGC has their own target for renewable energy, right?
Oh yeah, they're aiming for 10 GW of capacity by 2030.
Ambitious. But their approach seems, I don't know, kind of all over the place. They're buying existing projects, building new ones, and they've even partnered with NTPC. Why so many different strategies?
Well, think of it like this. ONGC's playing catch-up when it comes to renewables. They're not leading the pack, they're more like learning as they go.
Ah, fast follower approach then.
Exactly. So they're trying different things, seeing what works. Buying existing projects gives them immediate capacity, while building new ones gives them more control. And the NTPC partnership, well, that's about learning from one of the best in India.
Makes sense. But it still seems like a tough balancing act, especially when you consider what ONGC's finance director said about solar not even replacing coal yet, let alone oil and gas, which is, their main thing.
Yeah, they're walking a tightrope for sure. On one side, they've got their core business in oil and gas, which is going to be around for a while.
All right, it's not going away overnight.
Nope. But on the other side, they're making these moves in renewables because they know the energy landscape is shifting. And that's where risk tolerance comes into play.
Risk tolerance. How do you mean?
Well, how much risk are they willing to take on? Invested in renewables is a bet on the future, but it's not without its uncertainties.
And of course, there's that whole situation with their funds stuck in Russia because of the sanctions.
Yeah, that's definitely a factor to consider. It's a tricky situation, no doubt about it.
Okay, so lots of moving parts here.
Uh-huh.
But before we get too deep into the weeds, let's bring it back to the listener for a minute. What does all of this actually mean for someone who's following ONGC?
That's the key question, isn't it? We're going to unpack that more in part 2 of this deep dive. But for now, let's just say, ONGC's story is far from over. It's going to be really interesting to see how this all plays out. We're talking about what this all means for you if you're following ONGC, right? It's like they're trying to walk this tightrope between their legacy in oil and gas and their big dreams for renewable energy.
Yeah, and that makes me wonder, just how serious are they about this whole renewable energy thing? Is it a real change, or are they just trying to look good for investors?
Well, you know what they say? Actions speak louder than words. So let's see what they're actually doing.
All right, let's break it down.
They've got this whole separate company now, ONGC Green Limited, just for renewables.
Oh, right. I remember reading about that.
And they're not just sitting around either. They're buying up existing renewable energy projects. And get this, they're even bidding on these massive projects, like that 1GW hybrid solar tender.
Wow, okay, that's pretty big.
It is. Plus, they've got that partnership with NTPC, which is huge in the power generation world here in India.
Yeah, that's a pretty big deal, partnering with a player like that. But I can't help but think back to what we talked about earlier, that comment from ONGC's finance director. Solar hasn't even replaced coal in India, let alone oil and gas, which is, their bread and butter.
Right. It's kind of like they're sending these mixed messages. On one hand, they're talking about reducing their carbon footprint and reaching net zero emissions by 2038.
Sounds good. But then on the other hand,
They're also saying that oil and gas are going to be here for a while. It's that whole marriage thing again.
married to oil and gas, right? But also at the renewables party. Can this marriage actually work, though? Can a company that's so into fossil fuels really make a real switch to clean energy?
That's the question a lot of analysts are asking. And the answer is, well, it ain't going to be easy. Their whole expertise is in oil and gas, exploration, getting it out of the ground, producing it. Renewables, that's a whole different ballgame. Different skills, different knowledge.
So are they up for the challenge?
Well, they got to adapt, maybe bring in some new people with the right skills and invest a ton in research and development.
And let's not forget the money side of things. Going green usually means spending a lot up front. And it takes time to see a return on that investment. So how does all this impact their finances, especially with all the uncertainty about their money stuck in Russia?
That's the big question mark, isn't it? It's like another layer of complexity on top of everything else. If these sanctions in Russia keep going, or even get worse, that could really put a strain on their resources. And it might mean they can't invest as much in renewables as they'd like.
So it's a financial tightrope walk, too. And it's not like they're the only ones in this game, right? They've got competition.
Oh, for sure. In India, they're one of the big players, but there's competition from both public and private companies, like Reliance Industries. They're a big competitor in oil and gas, and they're also making moves in renewables.
Right, I've heard about them. What about globally? How does ONGC stack up against the international giants?
Globally, they're a bit smaller compared to companies like ExxonMobil or Shell. They're not in the same league, at least not yet.
Yeah. So how do they stay competitive, both here and internationally? What are their strengths? And maybe more importantly, what are their weaknesses?
Their biggest strength, I'd say it's their knowledge of the Indian market. They've been here forever, they've got these strong connections, and a track record that speaks for itself.
Makes sense, but that kind of leads into a possible weakness, right?
Yeah, their size and their, bureaucratic structure, they're this huge, complex organization. Sometimes it's hard for them to be quick and adapt to changes in the market. Smaller, more agile companies can jump on new trends faster, especially in the renewable energy sector.
So they need to find that balance, right? Between being stable and experienced and being quick and innovative. It's a tough one for any big company.
Okay, but let's talk numbers for a minute. We know their revenue's up. But what about profits? How are they managing their costs in this crazy energy market? Well, their profit for the first 9 months is actually a bit lower than last year. That's something to keep an eye on, could be a sign of trouble ahead. But they did announce a second interim dividend, 5 rupees a share.
Ah, so they're still making money and sharing it with their shareholders. Yeah. That's got to be a good sign, right?
Yeah, it suggests they're confident about their ability to generate cash flow, even with all these challenges. And speaking of good signs, remember that new invoice payment system we talked about?
Yeah, the one where they pay their bills super fast. Why is that so important?
It's a subtle thing, but it shows they're focused on efficiency and being financially disciplined. Think about it. When you pay your bills on time, it keeps your finances in order, and it builds trust with the people you do business with.
So they're building trust not just with the people they owe money to, but with investors too.
Exactly. It's a way of saying, hey, we're a reliable company, we manage our money well, and we keep our promises. In the long run, these little details can make a big difference in how investors see them.
Okay, so we've covered a lot of ground here. Financials, competition, and the challenges they're facing, trying to balance their past with their future. But what about the big picture? What are the things that'll really determine if ONGC succeeds or fails in the years to come?
That's the million-dollar question, and that's what we're going to dive into in the final part of our deep dive. We'll talk about the make or break factors that you got to watch if you're keeping an eye on ONGC. And we'll leave you with something to think about as you consider their future. Stay tuned.
All right, welcome back, everyone, for the final part of our ONGC deep dive. We've been through a lot with this one, haven't we?
We have their Q3 performance, how they're approaching this whole energy transition thing. It's a pretty complex picture.
Definitely not a boring company to follow, that's for sure.
Yeah.
Before we wrap up, let's try to break it down for our listeners. What are the biggest takeaways here? What's the story ONGC is telling us?
I think the first thing is their bread and butter business, that oil and gas, it's still pretty strong.
Yeah, that production turnaround was a big deal. And that new Eastern offshore project, plus teaming up with BP to squeeze more out of Mumbai High, those are some big moves.
It shows they're serious about making the most of what they've got.
Right. But what's it all mean for investors, though? Someone thinking about ONGC, should they be excited, worried, what?
Well, if you're looking for that steady, dependable return, ONGC's core business is looking pretty good. They're making money, and it's clear they're not just going to let their oil and gas operations fade away. They're actively investing there.
That's reassuring to hear. But at the same time, they're also trying to make this shift towards renewable energy, right? Like, they know the future of energy is changing, and they don't want to be left behind.
Exactly. And that's where things get really interesting. Because you have this huge company so tied to fossil fuels trying to figure out how to go green.
It's like they're straddling two different worlds.
It is. It's that marriage analogy we were talking about before.
Married to oil and gas, but partying with renewables. But can that marriage actually work? Is it even realistic for a company like ONGC to become a major player in the renewable energy world?
That's the big question. And the answer depends on a few things. First, how fast can they actually scale up their investments in renewables? Are they picking the right projects, and are they getting good deals?
Right, and can they actually build the expertise they need to operate in this new world of solar and wind and all that?
Yeah, exactly. And then you have all these things they can't really control, like what are governments going to do with energy policy?
Oh, right, and energy prices, those can be all over the place.
And then the global push for decarbonization, that's only going to get stronger.
So lots of uncertainty swirling around, but one thing's for sure, ONGC is definitely not just sitting back and waiting to see what happens.
Nope, they're making moves, taking some chances, trying to position themselves for whatever comes next.
Okay, so for all of you out there following ONGC, what should you be paying attention to? What are the things that'll really tell us if they're on the right track or not?
Well, the first thing is keep an eye on those production levels. Can they keep this turnaround going, or will those declines start creeping back in?
Makes sense. Got to make sure that core business stays healthy. What else?
How's their renewable energy strategy actually playing out? Are they making serious investments? Are they getting in on good projects?
Those are the big internal factors.
Yeah.
And of course, we can't forget about that whole Russian situation.
Yeah, the sanctions, those are a big wild card. Will they ease up, or is ONGC going to have to take a hit there?
Okay, so lots to watch. Production numbers, how their renewable energy plans are going, and what happens with Russia.
Those are the big ones. But there are other things, too. How are their subsidiaries performing? Are they managing their costs well? Can they adapt to changes in government policy? It's a lot to keep track of.
It really is. But that's why we do these deep dives, right? We try to make sense of all this complex stuff and give you the info you need to make your own decisions.
Exactly. We're not here to tell you what to think or whether you should invest in ONGC or not. That's up to you. But we want to give you the tools to figure it out for yourself.
Because at the end of the day, being able to dig deep, understand what's important, that's a valuable skill in a world where we're bombarded with information all the time.
Couldn't have said it better myself. It's about looking beyond the headlines, understanding the details, and seeing the bigger picture.
And hey, maybe someday you'll be the one sharing your own deep dive with the world.
Wouldn't that be something?
All right, that's going to do it for our ONGC deep dive. Thanks for joining us. Keep exploring, keep learning, and keep diving deep.
We'll see you next time.